Welcome to SST College of Arts and Commerce. This is SST Edupedia. I am Assistant Professor Deepika Valecha from Department of Commerce in Banking and Insurance. Today, we will be learning about a course which is Introduction to Cost Accounting. From that, we have one topic which is Introduction to Costing and Cost Classification, which is there in second year Banking and Insurance, semester 4. Now, first of all, we will see what exactly the cost accounting refers to. Cost accounting is concerned with recording, classification, summarization of cost for the determination of cost of the product or services. It also includes planning, controlling, and reducing such costs and furnishing the information to the management for decision making. So, first of all, for any product, if we sell the product in the market, before determination of the maximum retail price, that is MRP, first a manufacturer or a producer is required to find out the cost per unit of that particular product. It includes many things, and from that only we have a concept of cost accounting, where the costing, the data relating to the costing, which includes planning, controlling, execution of the product, and also the determination of the cost is done on the basis of the rules and regulations given by ICWAI, that is Institute of Cost and Works Accountants of India. Now, if we can see, the cost accounting is further informed or defined as the process of accounting for the cost from the point at which expenditure incurred to the establishment of its ultimate relationship with the cost centers and cost units. It is in its widest sense, it embraces the preparation of the statistical data, the application of the cost control methods, and the ascertainment of the profitability of the activities carried out or planned. So, further, if we can see, there are the various objectives of cost accounting. It includes number one, ascertainment of cost. That means we calculate cost per unit of a product on the basis of the various costing techniques, and it is very much important to calculate cost per unit to reduce or minimize the wastages and also to get the optimum allocation of the available resources. Estimates of cost. Here, the estimation for the future course of action, that is for the further planning, can be done with the help of proper costing techniques. If a company is required to make a planning regarding the next financial year or next year, then they have to frame the policies on the basis of the cost accounting, that what should be the costing of the product, and on that basis they can also increase or decrease their selling price per unit of a product. Next is cost control. The very important objective of cost accounting is cost control. With the help of a proper costing techniques, a company can have a proper allocation of the various, you can say the various resources or various elements of costing, so that the cost per unit can be reduced. Cost reduction. If in case we found that there are the wastages which are happening, or there are the alternatives available with which the wastages can be minimized, we can do in the case of the cost accounting. So, cost reduction is also one of the objective of cost accounting. Determination of the selling price. For each and every product, it is very important to determine the maximum retail price, or else we can say a selling price per unit of a product. It includes costing, it includes cost per unit plus profit element. So, until and unless the company is not calculating cost per unit, it cannot properly determine the selling price. facilitating the preparation of financial and other statements, and also providing the basis for operating policies. Here, the company's financial statements and other relevant statements can be prepared with the help of proper cost accounting techniques. So, these are the various objectives of cost accounting. Continuing further, what are the various terminologies in cost accounting? Number one, we have cost. Cost refers to the amount of expenditure incurred for a particular thing or a particular object or a particular event. Costing, it refers to the process of ascertainment of the cost. Cost accounting, there is a difference between cost, costing and cost accounting. Cost accounting is a broader concept. Here it includes application of the cost control methods, tools to ascertain the profitability of the activities which are planned under the cost accounting. Next is cost control. Cost control means control of the cost by the management. Following are the aspects or the stages in cost control. Number one, we have job costing. Here in job costing, it helps in finding out the cost of the production of every order, and thus helps in ascertaining the profit or a loss made out of its executing. The management can judge the profitability of each job, that means each work performed, for the future course of action. Then we have batch costing. Batch costing production is done in the batches, and each batch consists of the number of units for the determination of the optimum quantity to constitute in per batch. So these are the various terminologies which we can often hear in cost accounting. Coming further, what are the major elements of costing? For a determination of costing of cost per unit of a product, we have to determine the major three elements of costing, which includes material, labor and expenses. Further, material can be classified as direct material, which is directly related to the production process, and indirect material, which is not directly connected, however it requires at the intermediate state of the production. Labor, it includes direct and indirect labor. Direct labor refers to the people who are working in the factory, which are directly connected with the manufacturing process. Indirect labor are the people who are not directly connected, such as the people working in the office and the people doing the administrative work, selling and distribution work. There are the many things which are related to the not the mental work involved is involved. Here physical activity is not involved, so that can be counted as a indirect labor. Here are direct expenses, which are directly related to the production process, and there are n number of indirect expenses, which includes the overheads on the basis of the nature of the function, like office overheads, administration overheads and so on. Further, if we see the format of cost sheet, first of all, there are three types of stocks, we can say. First is we have raw material, stock of raw material. Then we have stock of work in progress, and also we have a stock of finished goods. Starting with the three basic elements of costing, which includes direct material. Here the opening stock of raw material will add the purchases of raw material in the year. We will add any of the incidental charges or the expenses directly related to the purchase of raw material will be added, such as carriage and word, and the closing stock of raw material will be deducted to find out the actual direct material consumed in the production process. Secondly, we have direct labor and direct expenses. By adding these three, that is raw material, labor and expenses, we will get prime cost. Prime cost is also termed as basic cost. Further, we add production or factory overheads in the prime cost, and there will be the adjustment of opening and closing stock of work in progress. Opening stock will be added, closing stock of WIP will be subtracted, will get the factory cost. Factory cost is also termed as works cost. Further, coming out of the factory, going towards the office, will add office and administration overheads, will get cost of production, or you can also call it as office on cost. Opening stock of finished goods will be added, closing stock of finished goods will be deducted, will get cost of goods sold. And lastly, the selling and distribution overheads, which are indirectly related to the costing, will be added, will get cost of goods sold, or you can say total cost of goods. And the profit element will be added and will get finally the total amount of selling or sales. Selling price per unit can be calculated by dividing the total amount of sale with that of selling price number of units. Continuing further, what are the various types of cost, or else you can say the classification of cost is done on various bases such as the nature, function, variability, controllability, normality, financial accounting classification, time, planning, and managerial decisions. Let's see one by one. Number one, on the basis of nature, we can say there are three different costs. We have material cost, labor cost, and direct expenses. By adding these three, we'll get the prime cost also. On the basis of functions, we have functions like manufacturing function, commercial functions like administration overhead, selling overhead. So we have admin cost, we have selling and distribution cost, we have manufacturing cost. On the basis of variability, variability refers to whether the cost is fixed cost or it is variable cost or it is semi-fixed or semi-variable. At this initial stage of the production, a company, each and every company is required to incur the fixed costs. For example, land, rent paid on rent paid on land or particular machinery, or we can say a setup which is required for the purpose of production process, that can be counted as a fixed cost or fixed element. Secondly, we have variable cost. Variable cost arises as per the number of units. If the number of units produced are less, then the variable cost will be less. So variable cost is totally depends on the number of units sold or produced. If it varies as per the units. Semi-variable and semi-fixed. The example of semi-variable, we can say commission to the salesman. In some of the companies, the commission of the salesman is fixed up to particular sum of amount, a fixed salary of 10,000, for example, and over and above, on the basis of the sales made by the salesman, they will be getting the commission on the basis of their performance. So this can be calculated, or this can be called as semi-variable cost. On the basis of controllability, we have controllable cost and uncontrollable cost. Controllable cost refers to a cost which can be controlled on the basis of the various activities. Say, for example, the use of electricity, use of some of the other items which are under the control of management. Uncontrollable, which cannot be controlled based on the basis of the some of the things. Say, for example, if any kind of a natural calamity happens, so there may be a possibility of loss. So that cost is something which is not controllable. On the basis of normality, we have two costs, which is normal and abnormal. Normal refers to the cost which occurs on the day-to-day basis, but abnormal, which again, it may occur due to the unforeseen situations which are not under the control of a manager. On the basis of time, we have historical cost and predetermined cost. Historical refers to a cost which is already done or computed or incurred at the start or initial stage of the company or a concerned institution, organization. Predetermined, it refers to on the basis of the future course of action, whatever the planning we are making, that concept can be done as a predetermined cost. On the basis of planning and control, we have budgeted costs and standard costs. Budgeted refers to what we have actually planned for the coming financial year. If a company is planning to produce the 5,000 products in a coming year, so accordingly they are going to make a planning for the material consumed, the labor required, and the other activities involved with the cost. So they do the budgeting prior only, so that there will not be any kind of problems further. Standard cost refers to a cost which is already fixed or some standards on the basis of the performance of the last year. Standard cost is fixed. Now, on the basis of the managerial decision making, there are n number of costs, which includes marginal costing, out of the pocket cost, sunk cost, imputed cost. Imputed cost is a cost which is already, which is predetermined, which is obvious cost, which is not required to be informed that this cost is included in the costing. Opportunity cost, if a company is incurring a particular cost on the basis of the another alternative available, that is something which we can say as a opportunity cost. Replacement cost, if say for example any particular machinery is outdated, or it requires some kind of advancement, so here company incur the cost of a machinery for the replacement purpose. That means they will go and replace that particular machinery with the new one. So your replacement cost will be there. We have avoidable cost, unavoidable cost, relevant or relevant cost, or differential cost. These are the names which, with the name only, we can understand your avoidable cost, which can be avoided, which can be minimized on the basis of the situations. Unavoidable, which refers to that cost even due to the losses also we cannot avoid, because it is mandatory for to incur that particular expense. So these are the various examples on the basis of the managerial decision making. So next we have methods of costing. Now in cost accounting or costing, there are n number of methods with which we can calculate the cost per unit. Number one, we have job costing. What refers to job? For each and every work allotted, there are the various jobs allotted. Like for example, if you have to produce a particular product, then there will be job A, job B, job C. There are the n number of jobs allotted to that particular product. So here in modern methods, we calculate per job, per the costing as per the particular job. So here are the methods there which we can calculate the same. Contract costing. Contract costing is basically connected with the contracts, or the, you can say, the various contracts relating to the buildings, or we can say various architectural contracts, where the contracts which are which go for more than 1 year, or say 2 years, so continuous costing is done. Batch costing, in particular batch of a unit, say in one unit, in one batch we have a batch of 500 units. So how much cost is incurred for that particular 500 units? That can be calculated with the help of batch costing. Process costing, there are n number of units which requires various processes. Say for example, production of the sugar out of sugar cane, that requires process. So here sugar cane is required to go from 3 to 4 processes, then only will get the sugar as a finished product. So here process costing involves the costing of a particular process, each and every process. Unit costing, per unit costing is done in this method. Operating costing, operating refers to day-to-day basis we do the various operations, which includes operating costing. Then multiple costing, it includes all the activities of costing which are mentioned earlier, that can be done with the help of multiple costing. So with this, we have learned about introduction to cost accounting, various terminologies in the costing, various classification of cost, and also the methods of cost accounting. Thank you so much. Thank you.